Well, folks, you wouldn't believe it. Jeremy went ahead and actually bought a large cap stock here in the past 24 hours, which is a miracle because it has been quite a while since I bought let's call it a mega cap, a large cap stock. But here in the past 24 hours is a stock that I feel is easy money over the coming years. And I don't throw around that expression very often. I like a lot of stocks. I buy a lot of stocks. But to be in the category of an easy money stock, those come very few and far between on this channel. And this particular stock has been devastated. And, in this sort of market right now, I don't think it's the most popular thing to talk about, buying the dip and those sorts of things right now. We're a very fear-driven market. We're a very fear-driven community on YouTube right now. And based upon pricing action in this particular stock today and other stocks, it's very fear-driven right now. That's what's driving this market. You have, big fund managers really pushing their weight around in this market right now and selling off some of these companies that have great futures and have great business models, but they're just being sold off left and right. So yeah, I've bought this one very, very heavily in the past 24 hours. Let's call it that. 70,000 plus I just put in this stock, like literally in the past 24 hours. And so there has to be a lot that I'm excited for this stock over the coming years. And so we're going to go in depth on the stock. I'm not just going to tell you what stock it is. We're going to go into the numbers. We're going to go into the balance sheet. We're going to go behind the numbers. Like, why did this stock fall so much? Why has it fallen so much? This stock is down significantly, massively. And once again, this is not some like penny stock or something like that or some small cap. This is a huge corporation. So we're going to dive into all that and why I think this stock is easy money, all those sorts of things. Hope you guys enjoy it as always. And, in terms of the stocks I've been buying recently, I can understand people not maybe being that into those sorts of stocks, right? Like Tattooed Chef, Oatly, Honest, companies like that. I never call those companies easy money, although I think I'm going to make a lot of money in Tattooed Chef and Oatly and Honest over the coming years. I never would call those companies easy money. They're earlier day companies. They have a lot to prove. They have to get their business models to profitability. So you can't go around calling stocks like that easy money, even if I think I'm going to make a lot of money, right? And so that's why I don't use that term when it comes to these particular stocks. An easy money stock to me, this is very important, okay? An easy money stock to me has 5 core factors. One, they have to be a profit beast and a cash flow machine. This company I'm sharing with you here today, they meet that criteria. They are a profit beast. They are a cash flow machine, okay? Number 2, I've got to feel like there's less than a 1% probability I lose money on the stock over the next 3 years. So if we fast forward 3 years in the future, I have to be like 99% sure that I'm going to make money and make a significant amount of money. If there's even a 1% probability or 2% probability or 5% that I'm like, oh man, maybe this goes wrong. I can't call it an easy money stock. I can buy the stock, but I won't call it an easy money stock. It's got to be ridiculously low probability I lose money over the next 3 years. It's got to have a forward P of basically under 30 on the stock to be an easy money stock. They got to have a business model that I believe am fully confident the business model is going to be much more relevant in 3 years from now than it is today. And lastly, to be an easy money stock, you got to have a great balance sheet, have way more in cash and investments than you do debts, which obviously help de-risk the business model even more. Okay. Now, if you have all 5 of those, then I can put you in that rare category of an easy money stock. And in terms of easy money stocks in the channel in the past, there's been 3 I've mentioned over the past few years. Apple, look at when I was calling that stock an easy money stock versus where that market cap and that stock's gone now. It's probably 3x the value. Facebook, when I was buying that one, it was like $140, $150. I think I got shares in the 130s. Look at that stock even today, even after the stock completely crashed, it's still up massively from when I was calling an easy money stock. And Berkshire Hathaway was another one that I called an easy money stock on this channel. And look at where that stock price has gone literally since I called it an easy money stock. So I don't usually put that term out there very often. So when I do, it's kind of a big deal, okay? And this one is the next easy money stock over the coming years, and it is PayPal Holdings, PYPL. This is the new easy money stock. This one's been devastated. It's down 24+% here today. The volume was incredible. I took this before the market even closed. This was like 55 minutes before the market closed. Look at the volume, okay? 116 million shares traded hands when the average volume is 15, 16 million. Like, that's incredible. This stock has fallen from $310 to 132. I mean, it's moving like it's a penny stock or something like that, right? Market cap 155 billion now. 1 year target's 254 from analysts on the stock. They'll probably bring that number down to like 190 probably, or 200. That really doesn't even matter in the end. Like, those analyst predictions are always wrong. They're either way too low, way too high most of the time, okay? I knew to buy the stock here today when I heard Kevin O'Leary on Shark Tank. Basically, they had him on CNBC, and he says, I'm selling it today. I'm dumping it. They're bad, or something like that. And I was like, oh, okay, Kevin's out. I'm in. Okay, Kevin O'Leary, that is. Kevin O'Leary's out. I'm getting in. But so let's get into why I think this is going to be an easy money stock over the next few years, and how much I'm planning to put into this stock over the next, let's say, coming weeks or coming months. And when it comes to this one, so first off, in regards to PayPal. Very important. This isn't just a PayPal app you're buying, essentially, right? Or the PayPal service. You're also getting Venmo. So PayPal and Venmo are usually the number 2 and number 3 most popular finance-related apps in all the United States of America, and they're huge internationally as well. Right now, because it's getting into tax season, TurboTax jumped up there to the number 2, okay? But most of the time, they're number 2 and number 3, and Cash App usually is number 1, which is owned by Square, by the way, which Square is actually pretty interesting as well. I think Square is a more dangerous version of PayPal with maybe a little more upside and also more downside. PayPal, I feel, is like a safer version. And so you're getting a more, I just want to say, diversified business model where it's not just one app you're counting on. It's 2 big, massive services that just continue to bring new folks to use them, right? And those folks use them usually more and more often than they ever have before. So that's very, very important to remember, okay? Now, in terms of why the stock is down so much here today, all right? Shares of PayPal plunged 25% on Wednesday, a day, basically after they provide a weak guidance. PayPal reported mixed results for the fourth quarter. Earnings per share came in at $1.11, X items, which missed the $1.12, which was expected by analysts. It beat on revenue estimates, reported $6.92 billion versus $6.87 billion, but that's not a big beat. Wall Street's going to look at that and almost consider it a miss because they barely beat, right? It also said it expects first quarter non-GAAP earnings per share of 87 cents, while analysts had been projecting $1.16. It also anticipated that revenue would grow about 15 to 17% for full year 22 on a spot foreign currency neutral basis. Analysts had projected almost 18% revenue growth for this company in 22. Now, when you look at this, you're like, okay, so they're guiding for the next quarter or EPS under revenue growth midpoint 16% versus analysts were at 18%, right? They slightly missed an EPS by 1 cent. They slightly beat on revenue. Okay. So the stock was 300 plus, and it sold off another 24% today. Yeah, a little bit of an overreaction. I mean, you would have thought literally it was the end of the world for this company based upon their earnings release, and it wasn't. Facebook earnings, on the other hand, that was a disaster, okay? I would not call these PayPal numbers a disaster by any stretch of the imagination. Are they exciting? No, it's never exciting when you're going to grow potentially 16%, and analysts were expecting you to grow about 18%. That's not exciting, right? The beat on revenue for this past quarter was a very, very slight beat. It's not exciting. But at the same time, the stock has been devastated through the floor. It's much of an overreaction. This was not a disaster earnings by any stretch of the imagination, right? And look at the move for the stock, right? It's down 60% plus from its 52-week high. It's down 42% in the past 3 months. I mean, this stock's treated like it's a penny stock. It's incredible. 1 year's down almost 47%. And like I said, down 60% or so from 52-week highs. Nothing short of extraordinary the way this stock has been just devastated and beaten down. And I would call it a massive, massive overreaction in this one, right? Market cap today is trading around $155 billion, right? So I had to change these numbers because Yahoo Finance always lags big time. So the forward PE right now for PayPal is anywhere from a 22 to a 27. I would put the midpoint at probably about 24.5 right now. Somewhere around there, right? 24.5 forward P for PayPal? Yeah, that's, ridiculously undervalued. I don't think PayPal is necessarily the greatest deal in the world at a forward P of 60 or 70. I wouldn't be buying the stock if that's the situation, right? And that's why I never bought the stock in the past. But my gosh, when we're talking about a 24 or 25 forward P for the stock, Yeah, for PayPal, you got PayPal and Venmo, two of the biggest financial services in the entire world that just continue to get bigger and bigger and bigger and are just going to continue to get bigger. Yeah, I'm not going to be able to sit there on my hands and be like, oh, no, I don't want a piece of PayPal. Like, I'm going to jump in and I'm going to add shares aggressively and very fast. Look at this. Fiscal year 22, this is for guidance. Expect TPV, okay, total payment volume to reach $1.5 trillion and revenue to surpass $29 billion. TPV expected to grow 19 to 22% at current spot rates and 21 to 23% on an FXN basis. Revenue expected to grow 15 to 17% essentially, excluding eBay. Revenue expected to grow 19 to 21%. So essentially, PayPal and eBay have broken up over the past few years, and that's hurt PayPal's numbers in the short term. Now, from what we're hearing from the executives, all that goes away starting in 3Q, so like 2 quarters from now, essentially. And so this whole kind of, dark cloud around PayPal because of the eBay breakup there and how much it's hurt the business and things like that, that all goes away. And they're still putting up these incredible numbers with these incredible expectations despite the whole eBay situation, right? So, which means their underlying fundamentals of the business are incredible right now. GAAP EPS expected to be in the range of $2.97 to $3.15. Non-GAAP EPS expected to be in the range of $4.60 to $4.75. 15 to 20 million NNAs expected to be added to PayPal's platform in fiscal year 2022. So when I look at their guidance overall here, I see a company that's expecting a lot more new customers to their platform, which I'm expecting. I'm expecting a company that's expecting very nice revenue growth, 15 to 17%. I'm seeing a company that's probably sandbagging EPS a little bit, in my personal opinion, but expected to have very solid numbers there. And total payment volume is expected to continue to increase rapidly. So what I see here is a company that's, just to be quite frank, a beast. This is a beast of a company, okay? As far as fiscal year 21, revenue increased 18%. And if you took out the eBay situation, the growth would have been 29% for the year for this company, okay? So I'm looking at a company here that these numbers are incredible. Like, there's nothing, this is not a company that's in disaster mode. If you look at the stock price, you would think it's the end of the world for PayPal, essentially. Like, literally, if you looked at just what the stock price has done, you'd be like, oh my gosh, this company's a disaster. They must have, revenues going down and, everything for the business model is devastated and there's just going to be nothing. Like, literally, that's what you would think if you looked at the stock price. And then you go a little beneath the surface and you start looking at the numbers and it's like, oh, yeah, this is the one that Kevin O'Leary sold out of completely today? Okay, yeah, I'll take your shares, Kevin O'Leary. I'm happy to take those shares. It's incredible. Balance sheet. I know a lot of my core viewers love the balance sheet, as you should. Balance sheet. Cash and cash equivalents and investments total $16.3 billion. Okay. Debt totaled about $9 billion. That's over a $7 billion, positive number essentially there. They could pay off all their debt tomorrow and still have $7 billion plus just sitting around in cash and investments. So the company's in an incredible position with their balance sheet. And remember, it's a super profitable business model. And it just continues, it's going to continue to get more profitable in future years. So as the company gets more and more profitable, right, they just continue to be in the situation where the cash piles, the investment piles pile up to the sky if they want to use that to buy out other companies, which we're going to talk about couple companies that there are rumors they might be interested in buying out, toward the back half of this year. We'll talk about that. But they can use that to buy out other companies. They can use that to buy back shares. They can use that to pay out dividends if they wanted to, which I don't think they're going to do because they're too much of a growth company to do that. But nonetheless, I expect the balance sheet to just continue to get stronger and stronger and stronger. And so, I'm looking at the income statement, I'm looking at the balance sheet, I'm looking at the cash flows. Like, everything is extremely impressive and just going to get stronger for this company over the coming years. And I see a stock price that's been absolutely obliterated. Okay. Now, there's a couple companies that there are rumors. Now, the key with rumors are, it could just be nothing there. Okay. But there are some rumors that PayPal could potentially want to buy out two specific companies in toward the back half of this year. So one's the Robinhood. I don't think it would be a bad move. When it comes to Robinhood, I think they should get bought out by somebody. They need a big brother, at that company. They've gone through a lot of drama. They've damage their brand to a certain extent and things like that. They need somebody overlooking them, in my opinion, and somebody that to acquire them. That's my personal opinion on Robinhood. So when it comes to Robinhood, I doubt they would want to sell anytime soon. They're too early into their public days as being a public company. if their stock continues to go downtrend, their numbers continue to be horrible over the next couple quarters, maybe in the back half of this year, 3Q, 4Q, maybe there is something that happens there. I don't know. We'll kind of see what happens with that one. Okay. Next one up here that there's a rumor is maybe PayPal would be interested in buying something like SoFi Technologies out. So SoFi is another one of those stocks that just is having trouble getting its footing, right? When it comes to SoFi, here's another one I don't think we would want to sell out right now. I think if this stock continues to downtrend into the back half of the year, I think there's a possibility that maybe they'd want to do a deal with PayPal or something like that, and they might get some pressure from some shareholders to go ahead and make a move or something like that. So I wouldn't be against that as well. But those are just rumors. None of that. My bullish thesis on PayPal and why I'm starting to buy the stock has nothing to do with if they were to buy out, Robinhood, or if they were to buy out SoFi in the back half of this year. If they do, great. If they don't, that's fine as well. But it is definitely a possibility. It would boost their growth up, and they would likely be able to get those businesses to profitable levels, which would be big, and give some kind of big brother guidance there. All right. Now, this is a huge deal. Amazon's to add Venmo as payment option at checkout. This is going to happen at some point in 22. We still don't know the specific date on when this will basically come out. And we were talking about this actually on Millennial Money last night, and I was explaining to the guys why this is actually a pretty big deal. And if you've ever ran a business or anything like that, and you've added the PayPal option, you understand that can drive a pretty good amount of business. And I check out through PayPal sometimes as well. I do a mix. Sometimes I'll check out through PayPal. Sometimes I'll check out through credit cards. Venmo I don't use as much personally because I'm a little more of a PayPal person, but nonetheless, this is a huge deal. And I was explaining to the guys, I was like, imagine if just 2%, not even a huge amount, just 2% of the people that buy something on Amazon use Venmo at checkout. Imagine the type of volume that starts to go through Venmo when you think about how big Amazon is, right? Now let's imagine it's 4%. Let's imagine it's 6%. Let's imagine it's 8%, which would still not be a huge percentage at all. That still means 90% plus of people are using just a credit card or debit card to buy something, and much smaller amounts using Venmo. So I look at this as it's also genius for branding, right? If you're on Amazon, which everybody pretty much uses Amazon throughout the world, or certainly in developed markets, and you see an option for Venmo, it's just another thing that hits you in the back of your mind if you never signed up for the service. Like, hey, maybe I'll check out this Venmo. And so I look at that as payment volume and branding. I love it. I think that's great. I don't think Wall Street has any sort of expectations around this deal. I don't think Wall Street's even paying attention to this, to be quite honest. And I would just say, don't underestimate about a deal where you have the payment option at checkout on Amazon. Don't underestimate that for even a second, right? And I know, as far as Uber Eats goes, they have it where you can integrate PayPal, and DoorDash has PayPal and Venmo. Don't underestimate how many people will use that as a payment option. That's all I'll say about that. And Wall Street's here, they're not even, looking at something like this, in my opinion. And I'm like, oh my gosh, you got to pay attention to this, okay? Now, in terms of me and buying more shares of the stock, so obviously I'm adding very, very aggressively. My next buy price is 126. My next buy price after that is 121. And that's if it goes down to those levels, right? It might not go down to those levels. We'll see. I know tomorrow's likely going to be a bad day in the NASDAQ, so maybe it pulls down some more. So for me, if it goes down to those levels, those are my next buy levels. Under 121, then we're at 116 and 111 for next buy levels after that. Once again, those are big ifs, because today was a big capitulation day for the stocks, just to be quite honest. By the way, this one was right around the time the market actually closed. Look at that, 134 million shares traded hands, in the usual amounts 15 to 16 million. Okay. So there was a flood out of the stock here today. And I was just happy to be a buyer for the first time ever and get some shares that I feel like are going to be, much more expensive a few years from now than they are today. And I feel like I'm actually taking a very, very low risk in this one. So yeah, that's why I love, buying PayPal now. That's why I feel like it's going to be an easy money stock. And we'll see if it does what the other stocks, did in the past and performs great over the next few years. Or maybe this one kind of breaks that trend. So right now is a great time to learn how to invest in the market on a high level. We got a massive Valentine's Day sale coming. It's the Stocks and Lovers Valentine's Day sale that is going to be coming for the private group Financial Fortress. If you want to get on the wait list for that deal, check out pinned comment down there. Much love and have a great day.